For TRICHOMES.com, I'm Jesse Batend, and this is The High Ground. On this show, we feature leaders of the cannabis industry. We talk to everyone from farmers to CEOs and public officials, anyone making an impact on the cannabis community and beyond. It's regularly reported that there are 600-something banks working with the cannabis industry, but the real number is likely under 50. Lack of banking is a source of real problems for the cannabis industry, and there are reasons to doubt that a true remedy is even possible without federal legalization. Take the SAFE Act. We recently talked to financial experts who said that even if it does pass, it'll still likely fall short of its goal of bringing in the major players. But in the meantime, many cannabis businesses do have options besides paying in cash. Here to explain, Tyler Beuerlein is the Chief Revenue Officer of Hypur, which specializes in high-risk markets that banks can't or won't touch. Hypur works with banks to process electronic cannabis payments, as well as counsel financial institutions interested in entering the space. Tyler, thank you so much for joining me.
Yeah, thanks for having me. I appreciate it.
Let's just start. I think it's helpful to always just restate the problem. So briefly, why is there a need for Hypur kind of in the first place?
Yeah, so, the industry remains federally illegal, which means that the branded card networks are not willing to facilitate transactions in this space until federal legality, which means anybody running a credit card, a reverse or cashless ATM has had to commit fraud to do so. So we understood very early on, nearly 7 years ago now, that this is a banking problem, not a payments problem. Transactions originate and settle through banks and credit unions. And so if they cannot permissibly bank this space or do what they need to do from a compliance standpoint, the payment mechanism would never survive. And we've seen that play out over the last 6.5, 7 years with every iteration of a quote unquote payment solution that launches to market, gets traction, and then gets shut down and leaves a bloodbath in the process. And so we felt very strongly that there was one method of payment that was going to work, but to do so, again, we had to solve the banking side of this. So Hypur is a regulatory compliance technology at the core. The fintech arm of Hypur launched nationwide about 14 months ago, and everything we do is a direct bank-to-bank transfer model. So when I run a transaction as a consumer, our banks and credit unions that openly bank the state legal cannabis industry move the funds from the consumer's bank account directly into the merchants. And that's what makes us different than anything else that's, I'm going to say, try to quote unquote solve this problem.
So it sounds like it's very key to your business having strong, positive relationships with banks that are willing to bank this space. What did that look like in terms of cultivating and finding the players that were willing to work with you? And how many people are kind of out there?
Yeah, so great questions, and obviously multifaceted. So there are less than 50 financial institutions, we believe, in the U.S. that are banking this industry to scale. That's a mix of banks and credit unions. That's nationally chartered institutions and state chartered institutions. The regulatory body does not necessarily matter at this point, right? So, so when we first started at the very beginning, we were selling a new technology that nobody had ever seen to financial institutions that didn't necessarily want to even disclose whether or not they were banking the industry. So to say that this was a heavy lift at the beginning would be a massive understatement. Now, fast forward, 6.5, 7 years, we've been fortunate that a large percentage of the institutions banking this industry are our clients. If a bank or credit union considers entering the space at this point, we typically hear about it. Obviously, whether it be from somebody in the industry, from a state representative that we know, or the bank or credit union themselves. So we've been very fortunate to, be in a very different position today than we were 6.5, 7 years ago. But it was a heavy lift.
I guess I've got a couple of questions here, and I know this stuff can get kind of complicated, so I'll try and break it down as simply as possible for people. But I think the first kind of question for you there is, what do the banks that want to bank this industry or other high-risk industries kind of need in order to feel comfortable doing that? And let's just sort of start there.
Yeah, the only conversation that matters in this entire equation is the conversation between the regulatory body and the financial institution. So if a regulator cannot get comfortable with what a financial institution is doing from a regulatory compliance standpoint, and again, this is not just a cannabis industry issue. If they can't get comfortable with it, the bank or credit union is not going to be able to bank that industry. So it's a mix of seasoned Bank Secrecy Act, anti-money laundering staff, robust technology that helps make the most difficult accounts in an institution the most transparent. That's really the foundation that we were built on. So if a bank or credit union can check the boxes from a regulatory compliance standpoint, they're going to be able to do this. But that's a very heavy lift. It can be complicated. And it can be a different expectation by a regulatory body as well. So we always advise our clients to be ultra transparent with a regulatory body, to sit down with them before they enter this market and go over their business plan and their model, and try and get a feel for what the regulatory expectation is going to be from that regulatory body. And so if they can do those things, they can permissibly bank this industry, and some have been doing it for over 6 years.
And so from talking to other people who are in this area, it sounds like while there is some concern about potentially repercussions from the fact that cannabis is still federally illegal, the concerns are kind of more on the regulatory side, that they might get some sort of retaliation or in trouble in some way and lose the ability to do business, or just that the cost involved in making sure that they're in compliance is often the thing that is holding these institutions back, more than a fear that they will themselves be prosecuted or, run afoul of the federal government necessarily. Is that something that you've seen? And is Hypur in some way helping to solve for that?
Yeah, I think so. There are a couple factors here. One, and most people fail to realize this, not only is a bank or credit union's charter on the line when they decide to enter a vertical like this, but the officers within that institution have personal liability. So if I'm a compliance officer and my financial institution decides to bank a federally illegal industry and I do something wrong, I can have a civil money penalty imposed on me that can't be covered by the insurance policy of the financial institution, right? Mm-hmm. So the notion that there's not risk here is that's absolutely not the case. I will say that the thing that I think propels or makes financial institutions feel most comfortable today with entering this market is there has not been a bank or credit union shut down for banking this industry. And we've now got a 6 to 7 year history of them banking this industry openly in some cases. So that fact alone is very comforting for institutions. Now, that being said, a reckless institution is a reckless institution. And if somebody does something wrong, they're going to be held accountable. And so, again, going back to transparency, that's a big issue. The other thing that you mentioned and is very accurate, this is not a cheap endeavor, right? Mm-hmm. This is a costly endeavor. And so, if an institution goes in to bank this, I hear merchants complain all the time about the cost. Well, if they do something wrong or they're not checking the boxes and they get shut down by the regulatory body, that hurts the industry as a whole. So, they have to cover the cost of that and make it profitable within that institution. And that's not easy to do either.
And how does that impact you when you look at expanding as a business into a new state? Are you in some way able to operate differently than banks? And if so, why?
Well, we're there to support the banks. Okay, so think of us as a standalone core banking system for high risk industries. So we help them make the most difficult accounts the most transparent. We also help them automate their processes and regulatory reporting so that the banking this industry is not so onerous or risky as if they were doing it just in a manual environment. That's not sustainable, especially as they scale. So that's kind of been the foundation of Hypur and the way that we work with institutions.
So you said that there are less than 50 banks, something like that potentially in reality, that are actually banking the cannabis business actively and willing to. But there's a lot of reports in the media that put that number way higher, between 600 and 700. And that seems to come from this FinCEN report. But my understanding is that information is just wrong. And like you said, the real number is closer to 50. So is there a brief way to kind of explain to people why that number is wrong and why it's so small?
Sure. So the FinCEN reports are based on suspicious activity report filings. So the only guidance that remains currently is the 2014 FinCEN guidance, which requires institutions to file suspicious activity reports, or SARs, the second they onboard a cannabis-related account and every 90 days thereafter. What that report misses is many institutions will file a SAR and then they'll file a termination SAR. So they file the SAR, acknowledging that they know that there's a cannabis account, and then they'll terminate it immediately after. Or many BSA officers that they don't know, or they have suspicion that it could be a number of things, they'll include marijuana-related business in the narrative along with a slew of other items, just because they're not quite sure, right? So they may cite that even though the institution's not openly banking it. And so that number is very misleading, but I can tell you that, we know where most licensees are banked at this point. I'd like to think that we've helped pair, a very large percentage of operators with the appropriate institution over the years. Just as a service to the industry, it's something we believed in doing. So we know who's banking where, we know what institutions are in each market. And, again, that number is less than 50. I firmly believe that. The other thing is, there are some institutions that may take an account or two in the cannabis space because they've had a relationship for, let's say, 30 plus years with an operator, but they are not openly banking the industry and they're not pursuing additional accounts or growth in that space. So that's the other aspect of it that can be very misleading.
Interesting. Yeah. So to that point of why there are so few banks currently doing this, there are bad actors out there. Do you feel that banks are justified in taking the slow approach to coming on, especially larger lenders who may only have a personal company policy against banking cannabis, but no specific reason why they can't take the risk on?
Yeah, I think, again, getting into the space, you have to be very prudent, right? You have to know what you're getting into. This is not hey, let's make a decision to enter and bank the space today and start it tomorrow. That's not how this works. There are many steps that need to take place. Again, conversations with regulatory bodies are key. These institutions, when they decide to bank this, they've got to get board approval, which can be a challenge. And so, I think it's important that people take a slow and steady approach, have a firm understanding of what they're getting into, have a firm understanding of the state regulatory dynamic as well. And as long as they do those things, I think, they can be very successful.
So let's turn to the things that might break down the barriers that are holding some of the larger, more traditional players back from kind of getting into the game, the market, whatever you want to say. There's a lot of talk about the SAFE Act as the bill was devised as a way to give banks more coverage to bank the cannabis industry specifically. But I've heard from a number of people, including yourself, that the SAFE Act is not going to solve all of the problems. Break that down for me. Why, if we saw the SAFE Act pass, would we probably not also see Visa, MasterCard, traditional payment people come on?
Yeah, on the payment side, the branded card networks have made it very clear that they're not going to enter this market until federal legality. The SAFE Act does not change the federal legal status of cannabis. Therefore, they are not willing to enter until that changes. And so that's been something that's been really I would say, grossly misrepresented the industry. And the other thing is, from a banking perspective, the overwhelming majority of licensees in this industry are already banked. So again, another, I'm going to say piece of misinformation that's in this industry that I think people need to really start to grasp. And then thirdly, I think it's important that people understand that there are a myriad of industries outside of cannabis that have the same banking issues. So institutions have had a hard time banking all of your Operation Choke Point type money services businesses. Those include check cashers, payday lenders, cross-border remittance, and a slew of other industry. And there are a very limited number of institutions that bank those industries, even though they're perfectly legal. And I think that in the cannabis space, this is always going to be a highly regulated, high-risk industry. And therefore, the notion that, Chase and Bank of America are going to run into the space, the day after the SAFE Act passes is very misleading. So I think it's got some real challenges. I don't think that the impact is going to be anywhere near what people expect it to be, unfortunately. The positives, I think, will occur on the lending side, which would be a big win for the industry. And also, the SAFE Act requires that the FFIEC come out with new guidance for financial institution regulatory bodies within 180 days. And I think that will really help give clarity to regulatory bodies and to financial institutions of, look, if we're going to do this, these are the guidelines we need to follow, because right now those guidelines are very loose. They're not clearly defined, and that causes issues.
So passage of the SAFE Act doesn't have zero utility. It doesn't completely miss the mark in the sense that there would come some definition and some clarity. It's just not going to be enough protection to allow, like you said, these major players to feel comfortable jumping in.
Correct.
So we talked an immense amount about payments and banking and that sort of stuff, but I've heard you say that the biggest actual pain point here is lending. Talk a little bit about that. Why is it so detrimental to not have access to capital when getting into, in particular, the cannabis industry?
Yeah, I mean, I think we've seen this play out, especially recently. And if you look at the way markets work, in many of the limited license markets, I would argue the real estate is potentially as valuable as the actual license, because the way that these states write the legislation, real estate properties have to meet a certain set of criteria. They have to be a certain distance away from churches, schools, things of that nature. So finding a qualifying property can be a huge challenge. And banks and credit unions have not been willing to lend on those properties. They won't do it. And so many of these operators have had to go in and pay cash for properties to lock them up. And when the capital markets opened up and these multi-state operators, kind of went wild from an acquisition standpoint, they had to go and buy all of these properties free and clear. Well, when the liquidity dried up in the capital markets, all of a sudden, these operators were sitting on massive portfolios of real estate that were extremely valuable. They needed liquidity to survive. And so what they had to do was go out to the private markets and borrow at, in some cases, anywhere from 13 to 20% interest rates. And that adds up quickly, right? So, compound that with the 280E issues and the other things they have to overcome. Lending has been a big pain point for this industry. Additionally, if operators are trying to lease a property, and I'm a landlord, and I want to lease a property to a cannabis operator, if I have a bank note on that property, I am not going to be able to lease it out to a cannabis operator, because those deeds of trust and notes have provisions that industries that are federally illegal cannot operate out of those buildings, or the institution has the right to call the note due. So needless to say, it's been a big pain point for the industry.
And there have been cases where CPAs or attorneys or construction companies who work with a client that is a cannabis business have also lost the ability to do their own banking because of that association as well, right?
Correct. Per FinCEN guidance, the way it stands today, if you derive $1 of income from the industry, you're technically a marijuana related business and you're subject to all of the regulatory compliance. So now I wouldn't say regulatory bodies are holding that to the letter of law at this point, but most institutions have a zero tolerance policy. So if they know you're associated with it in any way, shape, or form, they're going to remove you as a client.
So I'm sure that federal legalization, it opens up many doors and possibilities, but it would impact Hypur as a corporation. Given the just volatility of the moment that we live in with presidential politics and the uncertainty that that creates, not to mention the pandemic and everything else that's going on, how do you as a business sort of plan for these vastly different futures?
I think we've been fortunate to see things through a unique lens, right? And that's given us insight into where markets are heading, not only from a banking perspective, but also from a state and federal government perspective. So we know that eventually the industry will go federally legal. I think it's going to take longer than people anticipate, regardless of who's in office. But we're preparing ourselves for that date. And I would say that our strategy is reflective of that. So we're building out a network for high-risk industries. And when the branded card networks come, we will be ready. And we will hopefully be able to take advantage of that. And then on the regulatory compliance side, the expectations for financial institutions are not going to change. And so, again, this is going to remain a high-risk industry. And so on the reg tech side of Hypur, we still feel very bullish about our opportunity regardless of the federal legal stance.
This one's just kind of like an odd, wild pitch, I guess. It feels like there's a conversation here, especially when it comes to licensing and states work out their social equity programs. And we see states come out with mixed to poor results a lot of the time, just compared to their own stated goals. This is, a social justice issue. And there's a lot of talk in the corporate world about social purpose and things like that. Is it a real pipe dream that one of these institutions just kind of says, you know what, that this is a thing that we want to lead on?
No, I don't think it's a pipe dream at all. I think it would just, I think it would have to be defined as to how that would take shape, right? That would best, help solve the problem or be a benefit. But I don't think it's a pipe dream.
Interesting. So last couple of questions, I guess, would just be about the way that you as a company have navigated the past couple months. How has the pandemic impacted business for Hypur, and what are some of the challenges? What are some of the successes that you guys have seen?
It's been a bittersweet windfall for us. Obviously, you never want to benefit from a time like that or something negative happening. But, in many of these states, they require that the retail locations cease operation and shift to a curbside pickup or delivery model. And so the need for mobile payments has never been greater. Additionally, we came out with a contactless version of Hypur, and we did that in conjunction with one of our really strong partners in California, which is Kaliva. They've been rapidly expanding on the delivery side in California. They have a phenomenal operation, and they really wanted to give their consumer base a unique product that was, I'm going to say, a healthy version of payment, right? So we launched that product. It's been very successful. It allows the consumer to finalize a transaction without interacting with any device other than their own. And so again, that's just fueled our growth. And then with each new market that's launched, we've been very fortunate to see strong traction and continue to just to build on the momentum.
And in the larger sense, the pandemic did clarify some things. Cannabis businesses being determined as essential services is an argument point going forward, or it's just a fact that the industry can be proud of and will talk about regularly. But I guess I just wonder, when it comes to accelerating local regulations that allow for curbside delivery or home delivery, some of the things that we're seeing states bring on, this might sound, just sophomoric, but like, do you think that the pandemic sped up what might have taken a lot longer otherwise?
Yeah, I think, I was starting to hear, again, because of where we sit in the ecosystem, we kind of hear everything. And It was interesting to hear conversations with the operators that I consider the best and brightest throughout the country. And they started to realize that, I don't think they started to realize that, they just started to implement policies around it. They understand that the true long-term consumer for cannabis is not necessarily the person that comes in and buys retail. Those people know what they want. They know where they're going to get it. They come in, they buy their product, they leave. The real opportunity here is the fringe consumer that doesn't know they love it yet. But to get to that consumer, you have to have the experience that they expect from a transaction perspective, like Amazon, right? A convenient, I order it, I pay for it the same way every time. That payment method never goes down. It shows up at my door just like it does my Amazon delivery. And I think that COVID sped up that initiative or process in this industry rapidly, obviously. And I think it's going to continue to grow in that capacity.
Tyler Beuerlein is the Chief Revenue Officer of Hypur Inc. Tyler, thank you so much for taking the time to talk to me.
Thank you. I really appreciate it.
You can find more cannabis industry reporting at TRICHOMES.com, as well as more great shows like this one. If you're a member of the cannabis community and you have a story you want to share with us, reach out. You can reach the show at highground@TRICHOMES.com. Please take a second to subscribe to the podcast and write a review. It really helps others find the show. You can also join the discussion with industry insiders and get your voice heard by joining the community at TRICHOMES.com and following us on all social media. The show is produced by David Fortin. I'm Jesse Batend. Thank you for listening.